Every Minnesota homeowners faces this question at one point or another. Should you sell first or should you buy first? You make the wrong decision and this could cost you tens of thousands of dollars and back you into a corner that you cannot get out of. In Minnesota's current market, this question gets a little bit trickier than it used to be. Homes aren't selling quite as fast as they were a couple years ago. The inventory is down a little bit, so when you sell your home and then if you're trying to sell it first and then go to buy your home, it might be a little bit trickier to get into that new home, right? But there are a lot of more financial options, more financial tools to maybe help get you in that new home without having to sell first, some things that we've never seen before. So at the end of the day, it really comes down to which decision is right. Well, that depends on you and your situation. In this video, we're gonna walk you through both sides of the story. What it's like to sell first, what it's like to buy first, the different challenges that come with both. We'll go over some options that most people didn't know they had that can really take the pressure off of making this decision. And stick around to the end because we're gonna go over the real question you need to ask before making this decision. It's not the market, it's not the numbers, and almost no one asked this question. I had some clients a while back now that were ready to make the move, ready to upgrade. They'd owned their current home for several years now. They built up a lot of equity to take to the next one. They'd found a great neighborhood that they loved. They were excited. Everything just really felt right. But then the anxiety started to set in, right? They gave me a call. They said, Aaron, we found a house that we loved. We're ready to make a move. We haven't sold our home yet. What do we do? This question can be one of the most stressful moments in the home ownership journey. No matter which way you go, it feels risky. If you decide to sell first, where are you gonna go? Maybe you end up homeless. You could end up getting a short-term rental and then you have to pay moving twice. You have to load all your stuff into storage units. Who knows? And worst of all, you could shop under pressure. The fear of having to buy something that you don't actually want. On the flip side, if you decide to buy a home first, now you own two homes. What if the other home doesn't sell right away? Now you have two mortgages, 2 yards to cut, two of everything. Or you could feel pressure to get rid of all those extra things, the double mortgage, the double lawn, etc., etc. Then you fire sale your home and you don't get anywhere near what your home's actually worth. Both fears are legitimate and both are avoidable if you approach the situation in the right way. Let's walk through each path and what it actually looks like in today's market. Quick intro, I'm Aaron Zenfennig with Titan Real Estate Group. I help homeowners across the state of Minnesota make clear-headed decisions about their largest financial asset. We talk about the whole picture and not just the part that benefits the person who's talking. All right, here's what you need to know about both sides in today's market in Minnesota. Option 1, sell first. Selling first means you know exactly what you have to work with. Your money's liquid, your price is locked in, you know exactly how much you're gonna get from the sale of your home. You're not gonna have two mortgages, and it's just financially a safer decision, right? There's a little bit less risk. But it comes with real risks. Right now, the average days on market is 44 days in Minnesota. So that means between moving into your new home and selling your current home, it could be anywhere from 6 to 8 weeks and maybe even longer. If you sell first and then start shopping, you're on a clock. You're under pressure to find your next home now. And in Minnesota winters, the stress of getting into your next home is not just a financial one, it's a logistical one too. A benefit of selling your home first is that when you're making offers on the home that you're trying to buy, you're no longer contingent on the sale of your property, but you're contingent on the close of your property, which will put the seller of your next home a little bit more at ease, right? So it can definitely be an advantage when you're in a multiple offer situation. So the trade-off is if you sell first, you're gonna be financially more stable in the fact that you know exactly what you have to work with. You're gonna be able to make stronger, non-contingent offers, but it's gonna come with a little bit of a risk of not knowing where you're gonna go next, having to find that next home under a clock, a time restraint, and then often it can really, lead to two moves where you're having to do a short-term rental situation. Buying first means you found the home that you want, you're making a move on it, so you know that you're gonna get it. You're not living in limbo, so you're like, well, where am I gonna go next? You're not under pressure, so you can really wait to find the actual home that you actually want. Buying first means that you found your next home to go to before you sell your home, obviously. It means that you can purchase the next home without having to sell first, so you know exactly where you're going. You know that there's only one move, right? You don't have to move into a short-term rental. You don't have to shop under pressure. It's the house that you actually want, but there are some real risks with purchasing the next home first. If you buy first without a plan for your current home, you may end up paying two mortgages. Now in the state of Minnesota, the average purchase price is $350,000. And at that price, between two homes, your monthly payment is gonna be roughly about $6,000. And that's a lot of money for anyone. So that puts a lot of strain on the household, and a lot of people can't do that for too long. And then if your current home takes longer to sell, those stress factors compound real quick. There is also the pressure point. It's opposite, obviously, when you're selling first. It's the reverse. It's when you own the next home, now you're under pressure to get rid of the last home, and so you're much more likely to sell it for less than what it's actually worth. When you sell under pressure, you're more likely to accept a lower purchase price, put up with more contingencies, make more concessions, and just give up more money than you really should. The honest trade-off is that buying the next home first is going to be, you can find the home that you actually want. There's no pressure of where am I going to go and having to settle for that home that you don't quite like, and you're only going to have to move once. It creates real financial exposure if your current home doesn't sell on time. And here's where the conversation gets a little bit more interesting. Most people think that buying or selling is a binary choice, right? One or the other. There's actually a lot of different tools out there that make this a little less black and white. Our first option here is a sale contingency. So this is where you make an offer on your next home, but you make it contingent on the sale of your current home. You fill out an addendum that says, hey, here's my home that I need to sell. It is not on the market, or it is on the market. And if it's not on the market, it will be on the market in X amount of days. So you have that many days to prepare your home, get the pictures, put it on the market if the seller of the next home decides to accept your offer. While this is going to protect you financially from having two mortgages and that uncertainty of where you're going to live, it also makes your offer much weaker with that contingency. If you're in a multiple offer situation and there's a buyer out there that isn't contingent, almost every time, even if your price is higher, you're not going to win. It's not always a deal breaker, and depending on the situation for the seller of the next home, it's kind of a toss-up. It's definitely a situation by situation. It's something that if you hire the right realtor that we can help you navigate through. But again, if you're in a really hot market and if it's a really nice home, if you like it, probably 10 other people are going to like it, especially with this low inventory. So again, it's not going to put you in a very strong situation in multiple offers. Another option that people are not aware of is what's called a bridge loan. So let's say you want to go to the next home, but you just don't have the money. It's all wrapped up in your home. You can take out a bridge loan or even a HELOC and to tap into your equity. A bridge loan is a shorter term loan, 6 to 12 months. It's where you get to lock into your equity, take that money out of your home and use that towards the purchase of your new home. And sometimes the equity is enough where you can actually purchase your next home for cash then. So it's about a 12-month loan. That way you get the money out of your home, you go purchase the next home, move into your next home at your leisure, then you spend the time getting your home ready for selling and then sell that on the open market. Now, this does also come with risks. Bridge loans have a little bit higher interest rate than a typical conventional mortgage, anywhere from 8 to 10% right now. Again, if your home doesn't sell, you're carrying that extra cost, but it also, it's a trade-off. You don't have those other things to worry about and you're into your next home already. And then the other option after the bridge loan is a HELOC, like I just said. So a HELOC is where you tap into your equity. It's not a loan per se, it's more about, it's a line of credit. That's what it stands for, home equity line of credit. And so that's where you take out a second mortgage essentially on your home. And now this is a line of credit, and so you're not paying interest on it unless you're utilizing that credit. So great example, my first home that I got turned into a rental, wanted to use the equity in the home to do some other things with it. It was worth $350. I owed $200 on it. They take 90% of that value, so 350 times 0.9, then they subtract whatever that number comes up with, then they subtract whatever you owe on it, and that's your line of credit. Now that money sits there, and it's a 10-year line of credit, and you only pay interest on what you use, and it's interest only, so the payments are a little bit smaller than if it was a bridge loan, right? So if you have a $100,000 line of credit, you take $10,000 out of it to put it on a down payment, you're only paying interest on that $10,000. You still have access to the other $90,000, but you're only paying interest on that $10,000. And again, it is an interest-only loan, so your monthly payment is going to be less than if it was a full loan with principal being paid as well. Now, you gotta be careful because since it's interest only, your principal is not dropping, and so if you're not paying more than your interest each month, that debt is not going down. And so you gotta be very careful on how you utilize this and make sure you don't go crazy with it, because if you use that for something that's not a return, I only use my HELOCs to invest in something, or if it's an emergency, but if you're not using your HELOCs to invest and get a return on that money, now you have to definitely budget to make sure you're paying more than that interest each month, because it's only a 10-year loan and you only have 10 years to pay it off. So people can get in trouble real quick, so make sure you're careful of that. Here's the summary. Everything depends on you and your situation. Depends on how much equity you have, depends on your financial situation. Everyone's circumstance is a little bit different, so there's no one glove fits all. It really comes down to your situation. And again, I'm a realtor, so I'm not a financial advisor, so I can definitely kind of talk to you about my experiences and kind of give you the different examples of what I've gone through. But at the end of the day, you really need to make sure you consult your financial advisor and your loan officer to make sure that you're making the financial decision that's right for you and your family. So here's the big question that we've all been waiting for, the one that I told you about at the beginning of the video. So buy or sell, which one? Here's the question that nobody asks. How well does your home show? Not how much is it worth, not how much it's going to sell for, but how well does it show right now if a buyer walked through your home? How well is that home going to show? Because all of these other things come down to one thing. All the risks, the contingencies, the double payments, the HELOCs, the bridge loans, all this stuff. How quickly and how confidently are you of your home sale? How confident of that home price you're gonna get? Are you budgeting at the very top and then hoping to goodness that you find the right buyer that's gonna pay top absolute dollar for it? Or are you budgeting in the middle? And you're saying, okay, my home is definitely gonna be worth this, worst case scenario. My home's in good enough condition, all that good stuff. So all those things are definitely, it's all about how quickly and how confident are you gonna sell your home for what price. So it's all about how well is your home going to show. Because everything in this decision, the payments, the monthly payments, the risks, the contingencies that you're putting on it, all comes down to one factor. How confident are you in the sale of your home? If the home is beautiful, ready to get staged, new paint everywhere, new flooring throughout, decluttered, all this good stuff. Homes that show beautifully like that and get great pictures right away are gonna sell much quicker than a home that you haven't packed up. I always tell people you have to pack when you move, right? If you pack first before you sell, you're gonna make more money than if you wait till after you sell the pack, right? And then staging is the most important process in the entire process of selling your home. Staging is the most important factor. With the internet nowadays, you have 3 seconds to catch people's attention. Everyone's click, 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 click on all the pictures. And if your home is not gorgeous in those pictures, you're done. They're on to the next one. So if your home is ready to be staged or is currently in staging condition, shows beautifully, buyers buy an emotion, you're trying to draw out that emotion when they walk in the door, that's gonna be a confident sale. You confidently get top dollar for it and it's gonna sell quickly. But if your home's in a little bit disarray, you haven't cleaned up in a while, you're kind of, oh, that dripping sink that you were able to take care of next year, that's still there, a little bit of back mold back there that you're looking at, those kind of things, buyers definitely pay attention to that stuff, especially now as we get more towards a balanced market. The homes that are really ready to go are selling quickly, where the homes that are in a little bit rougher condition or not as updated are the ones that are gonna sit. They're the ones bringing out that 44-day average. The homes that are in really good condition right now, that are renovated and ready to go, clean, staged, great pictures, priced right, those homes are selling quickly still. So you really gotta take a look in the mirror and see what is your home sale going to look like? What condition is your home in? All right, guys, this is where I wanna hear from you. Who's looking to buy, who's looking to sell, and which one do you do first? Drop your situation into the comments. I read every single one of them. Let's get the conversation started.